Hey, so somebody told you can't buy a property without perfect credit? Let me put it this way. That's not true, not even close in 2025. In this video, I'm gonna walk you through exactly how to buy a property with low credit in 2025, even if you're starting from scratch. Let's get into it. Hey, it's Jamel Gibbs, your family-oriented entrepreneur. Welcome to this video. So here's one of the biggest myths that I hear. You need a 700 credit score to buy a house. Well, I'm here to tell you it's far from the truth. Not even close. Don't even pay attention to it. Yes, credit matters sometimes, but credit is not the whole story. There's people out here buying houses with 600, even 500 credit scores using the right strategies. And in 2025, there's creative options, there's different programs that you can tap into, and there's more partnerships available now than ever before. So don't disqualify yourself before you actually start and get the right information. I'm gonna share some strategies with you. Let's hop into the first one. All right, so first, let's start with the most common low credit loan, the FHA loan. If your credit score is at least 580 or higher, you can qualify for an FHA loan with 3.5% down. So let's say, for example, you want to buy a property that's $200,000. All you have to do is come up with 3.5% down and have a 580 credit score. So that means that you need at least $7,000 put to the side as your down payment for the property. So if you have $7,000 and you have a 580 credit score or more, you can qualify for an FHA loan. Now, here's the thing. If your credit is lower than a 580 credit score, you can still qualify for a loan. All you have to do is come up with 10% down. So on that same $200,000 house, all you need is $20,000 to put down if your credit score is below 580. But if you're not far off from the 580, you just clean up your credit just a little bit. It can save you a lot of money that you have to put down on the house. So it doesn't hurt to go ahead and clean your credit up in order to be able to keep more money in your pockets. So what do FHA lenders care about besides credit? They want to look at your employment history. They want to look at your debt to income ratio. And they also want to see if you have any bankruptcies or recent foreclosures on your credit as well. The good news is the FHA is designed for regular people, not just people with perfect financials. That's the point. All right, so let's just say the FHA is not the right fit for you. Maybe you're not quite there yet. Here's another move. Partner with somebody who has better credit than you, plain and simple. It can be your spouse, it can be a family member, it can be a friend, it can be a business partner. As long as they have better credit than you can create a win-win situation with them. You bring the hustle, you bring the research, you bring the sweat equity, they bring the credit. It's a win-win for everybody. The same way you would use business partners who have capital when you're cash poor in order to buy real estate, you can use business partners to bring credit to the table rather than cash in order to be able to accomplish the same exact thing. So whether they're a private money lender or a credit partner, you accomplish the same exact thing by using other people in your business. And you create win-win opportunities for both you and the person that's getting involved with you. Everybody needs to eat in these transactions. Now, if that doesn't work, you can always go to the seller of the property by going the creative route. So if you've been watching my channel for any amount of time, you know I'm a huge advocate of creative finance options, seller financing, subject to, wraps, lease options, things of that nature. When it comes to seller financing, what you're doing is literally partnering with the seller of the property in order to be able to create a winning situation. The best part about that is you don't need credit, you don't need cash, you don't need to fill out any banking paperwork. You're not going after traditional financing. You're going directly to the seller in order to be able to get the financing on the property. So the seller is going to go ahead and create a note for you. You'll get the deed for the property and you'll pay the seller back over time. When it comes to lease options, you're literally renting the property from the seller with an option to buy it later on. So there's no banks involved in that. And when you need to go to subject to route, you're taking over the seller's existing payments. So you don't need to go to the bank for that. So as you can see, real estate is flexible. And the more you learn the game, the more doors you can open for yourself. Let's move into strategy number 3. Another powerful move will be to tap into local first-time home buyer programs and credit-friendly lenders. Most cities and states have programs that offer grant services, they offer down payment assistance, or even lower credit requirements if you attend a home buyer class. And here's a quick tip. If you go to credit unions or local community banks, they usually have way more flexibility than if you were to go to a larger bank in your local area. So talk to lenders who specialize in low credit score mortgages. They exist. You just got to find them and have the right questions to ask. Now, here's something a lot of people forget. Lenders just don't look at your credit. They look at the whole picture. If you got strong, consistent income, if you got some savings or a retirement account, or if you got a property with strong rental potential, that can literally make up for a lower credit score. It's all about presenting a solid story to the lender. Let me give you an example. DSCR loans. A DSCR loan stands for Debt Service Coverage Ratio loan. These lenders will look at the property's circumstances more so than a perfect credit score. Not saying that you don't have to have decent credit for some of these loans, but a lot of lenders will offer way more flexibility if you go to the right lender when it comes to these types of loans. If the property can produce income and it's a solid investment, the lender will look at that more so than your personal circumstances. So the fourth strategy is literally leveraging your strengths that you have in order to be able to buy real estate in today's market. Look at your circumstances. Look at the pros of what you bring to the table versus the cons, and see how you can leverage those pros in order to be able to buy your first or your next property. So let me give you a few bonus tips so you can take some homework with you in order to get started on your journey to buying your first or your next property. The first thing you want to do is pull your credit report and dispute any errors that you see on your credit report. This alone can give you a huge bump in your credit score. The next thing you want to do is start saving money for a small down payment on a property, whether it's $3,000, $5,000, $10,000, whatever the case may be. Start saving money right now so you'll be ready when that right opportunity comes. And believe it or not, that $3,000 to $5,000 can go a long way. The third thing you want to do is get a strong pre-approval letter before you shop for real estate. This shows any realtors you're dealing with, as well as sellers, that you're very serious about moving forward. And then finally, what you want to do is go ahead and start building your team. You want to have lenders, you want to have realtors, maybe even a credit coach and a mentor in real estate like myself, who will show you the right way to do things in order to be able to benefit in today's market when buying real estate. Most importantly, don't wait for the perfect time. Start where you are and take it from there. Look, if your credit is not where you want it to be right now, that's okay. You can still win. Real estate is not about being perfect. It's about being strategic. And in 2025, there's more ways than ever before to get into the game, even with a low credit score. Now, if this video helped you, do me a favor. Be sure to like the video, subscribe to the channel, click the notification bell, and leave a comment in the comment section, especially if you want more videos just like this. And if you're interested in real estate investing in general, and you want to know how you can get started, even if your credit is horrible, if you don't have a lot of money, if you don't have any experience whatsoever, be sure to check out my JV agreement as well as my joint venture training below, where I'll show you exactly how to partner with other investors in order to be able to make money in today's economy. I'll talk to you on the next one. Take care.